Good evening, this is Nick Inman from VolumeProfileTrader.com on Thursday, November 10th, and tonight we're going to cover a few different names, starting with the S&P 500. So today was an inside day, and what that means is today's range was engulfed by yesterday's range. We've seen a few of these in the last week or so. We have yesterday's high and yesterday's low, and then we have today's low and today's high. So what we're looking at here is if you're observing the market profile chart or the volume profile chart, you can see that yesterday we had a volume range that was pretty heavy at this 1242 to 1246 range, and then we had another one form between 1224 and 1230, and this is on the S&P futures contract. And you can see today, if we just look at the boundary, the lower and upper boundary of that high volume area, of those two high volume areas in yesterday's range, you can see today it did most of its damage within those two, that range. So, and any dip, the dip below into this lower high volume range was bought, and the rally above, both in the morning and in the afternoon, were sold into. So what's that mean? Well, first things first, it means that if you're looking for a break one way or the other, we didn't get much. Although what is interesting, just how the market closed today, was it did close, in the top half of its range and above the point of control. So that's a positive sign, but anything can happen overnight, and it can send the market either way. The other thing to look at is the 5-day point of control, which includes some market action from, there's been some printing in this price from prior days. So this point of control gives you the feeling that this market's heavy, and any move higher should be sold into. However, it's hard to say that that's true so far, only because today didn't give us a great idea of what's going on, because it just stayed within yesterday's range. So what I would suggest is wait for tomorrow and see where the market wants to go. We want to see a breakout out of this range. If it moves higher, then a short-term trend is to the upside, but unfortunately we have some resistance targets to the upside. And likewise, if the move is down, then we have some downside support targets. But it should be an opportunity to go, to trade one way or the other. So as we zoom out one and look at the S&P on a larger term time frame, this is the 1 hour chart, you can see what's going on here. We definitely have our support at this October point of control around 1210. That's our first major downside target. But we also have support at November's value area low, which is around 1223, give or take. And then we're struggling at November's point of control, which as we've been covering, has been a big pivot for this market over the last 2 weeks or so. So what we're looking for here is, if this market rolls over, this is probably a good place for it to do it, only because it's your point of reference. And for the rest of the month of November, maybe we see a move to the downside. It's just hard to, given, of course it can have a big market swing like we had back here, but given the way that these volume profile charts are set up, it's hard for me to get behind a big move to the downside, even though these whole moving averages have gone from pointing straight up, and now they're, moving sideways to down, except for this orange whole moving average, which is the 1597. So that's a big moving average. but these whole moving averages, they're definitely indicating sideways consolidation, which we've seen, but we want more than that. We want to know where the direction of the market is going in the next couple weeks, and right now we're still waiting for that answer. All we can do as traders is trade the extremes, which I feel right now the downside is that 1223 level, and the upside for now is the 1245 level. Though I would much rather, well, if tomorrow we open up at these levels, for example, and we start seeing a move lower, at least you have a point of reference of this November point of control, that this, all important 1236 to 1240 range. That's what we're looking for in terms of, a reference point for a move lower. But it's hard to get behind that right now, because what are your expectations for the downside? Well, your first target is 1210, so it's not like we were just 10 points from that yesterday. And then below that, there's 1195, which is the 3-month point of control. So there's not a ton to get excited about from the downside until it starts breaking, really starts catching momentum to the downside. If we're just having these, one-day wonders where we have a big swoosh down, and then basically, it stops going down and we just kind of stay in this range, then, that's just a sit on your hand strategy rather than get involved to the short side. So let's jump into a few names. First, we'll cover gold. And we're going to stick on this 1 hour time frame for gold. Looks like gold short term has, and this is the gold futures contract. If you want, GLD, that's fine too. We're seeing a pullback in gold, and you can see this point of control that has formed. This is new over the last couple days, and it gives you a reference that this general area looks like rejection from the gold sellers. So if you are a gold trader and you want to take a little bit of profit, you can see why you should, because this 173 to 175 level appears to be resistance for now, though it's only down $1 on the day, so it's not like there's a lot of selling pressure. And even though we have whole moving average, our shortest term whole moving average moving straight up, so the trend short term is still higher, and even our medium term whole moving average is starting to point up. So this bounce that we saw back in October, it was a pretty decent move, and now we're just going, it looks like we're going to rest for a little bit and wait for the next move higher. But it looks like this downside, you can see we had lows right at this, high volume area. We had some decent support, so I would say 169 is your downside and 175 is your upside. So a pretty tight range in gold for the short term. But one thing to notice is you see the long-term picture of gold, and this is just a 2-year chart. You can zoom out 10 years and you'll get a similar picture. Price is appreciating. The only thing that's gone on differently lately is we had a huge run-up in gold, and then now we're developing a bigger range, and this gold could come back down to this 161 area, which is the point of control for the range, or it can just, honestly, it can, let me rephrase that. If it stays, we want to see gold stay above 161 and basically just stay above it for as long as it wants to, and then if it wants to resume its uptrend, then it can, as if I'm trying to tell gold what to do. But from a buyer's standpoint, that's what I want to see. But it's clear that we look like we are in a short-term consolidation pattern, and we could be there for the foreseeable future at least. Okay, let's cover Apple. We saw our breakdown in Apple. That's what we've been waiting for, everyone. We got our pattern. This was an after earnings pattern, and we got follow through to the downside, and we just had to wait for the setup. And in last night's video, I talked about buying the 395 December put and selling the 380 December put, and obviously that has turned into a profit. I think the trade's up about $2, so there definitely is some more profit to go in this trade. Just gonna wait and see how Apple trades for the next couple days, and may take that trade off, just depending. You know, there's no reason for this thing to come back and basically take away your profits, but there is a reason to let this thing run. Apple's down 2.5% today, and the market was up, so this is an important development that's occurring. If you want, actually, yes, I will get you. Actually, we'll stay on this chart. So what we saw here was October's point of control. It formed at this top end of the range, and this 404, we'll just use this whole high volume area, 404 to 407, so about a 1% range, not quite. And from there, November occurred, and we were on the bottom of this range, this high volume range that, the range that developed, and we were connecting the lows, and we were getting, flat top with higher lows, and November's point of control formed at the bottom of this range. We tested this high volume area, and the next day we gapped lower, and then this point of control, for the last 3 months, it's been up at this range, and now we were basically waiting for some resolution. And as Apple started to break down yesterday, I initiated this position, this 395 by 380 put spread, and on anticipations of a breakdown. And today you got one last chance to do it at the open, and we had a huge flush out today. So you can see how it takes time for things to develop, but once they do and you recognize what's going on, you're going to you're going to have plenty of opportunity to make a ton of money. So as far as Apple short term, we need to look at the lows of the day, because they could be a low as we look at similar, it was resistance back at, at this congestion level. This level was resistance. It could be support now. You never know. And you can see the volume, we have decent volume relative to this range. So you can see it sliced through the low volume profile, relative to the high. And this is our stopping point. So we'll see if Apple has some more to go. 377 would be the next target. But we were talking about, I mentioned last night in last night's video, 380 is the target, which is why I initiated this position. But for people who like moving averages, we see you can see what's gone on here. Sorry, at first I had the chart up, which indicated that this was the point of control, this 383 level, and all I did was I included the overnight session, and what that also made was my moving averages right. So this red line, this is our 50-day moving average. You see it broke today. So as far as downside target, clearly without overnight, which I'll show you again in a second, this 382 to 384 level, it matters. You can see Apple stopped there today. Those were the lows of the day, and now we may get some sideways consolidation. But over the last 3 months, our point of control formed at the top of this range, and it looks like Apple's starting to roll over. So I just have a feeling that maybe we're going back down to this 370 level, and if so, there's $15 more in downside left in Apple. So if you're long Apple and haven't taken some risk off by selling some shares, it may be too late to do so. We need to watch what happens tomorrow. But I would have this 382 level, these lows of the day, that would be my line in the sand. Even if Apple breaches it and then moves higher, you're just exercising discipline, and you can always buy Apple shares back. And to show the point of control over the last 3 months again, just using the day session and not overnight, is this all-important 380, 382, 383 level. So maybe Apple gets a short-term bounce here, but on that bounce, how many people who bought in this high, at higher prices want their money back, and they're just trying to get as close to a break-even as they can? I see this big high volume. It just looks like a cliff that Apple's jumped off of, and now we're looking for some type of downside support. And to be honest, from a longer term, which includes Apple's consolidation from the beginning of the year, this 360, 350 level, that really looks like a target. But first things first, let's start with this 383 level, and then let's move down to the 370. And remember that the 200-day moving average just isn't accurate. It's more around 370. So that's our next target on Apple. I had a special request from a trader I rule, and he asked for me to cover a few names, so I'm going to go through them really quick, give my quick analysis. First one was RIM, Research in Motion, and this has been a hard stock for one to own, only because it's gone straight down, and we were in the 60s earlier this year, and now we're down in the teens. So it's hard to get behind it, but as stocks go further down, they become valuable, or more, value investors look at them and find a bargain. So what I'm seeing here as far as a chart pattern is we see this potential bullish wedge pattern, which means the highs and the lows basically come to an apex in a downward pattern, and the resolution is to the upside. If we do get an upside move on RIM after, if this pattern comes to fruition, targets 23 and 28. Those are your two upside targets. So this is RIM. The next is First Solar, and similar situation. First Solar, it's gone down in price for the last handful of months, just like Research in Motion. But generally speaking, we're getting this downtrend, and we had a major bottom at 42.50. This point of control is right at 47.75. I really like that. But until we trade above it, I tried to get long this thing a few days ago, and I got stopped out for a small loss. But until we get above that level, it's hard to get behind this, only because what's keeping it, and I'm asking this question, what is keeping it from still going to the downside? It's gone from 163 high down to 45. So it's really hard to get behind stocks like these that have gone so far down. When just to pull up an example, when you could be behind names like McDonald's, who higher highs, higher lows, whereas First Solar, you're trying to pick a bottom. So although I like how this pattern is setting up, it's got to show some kind of upward move and a break of this downward channel to get me interested. And if so, it could have a nice pop up to $60, which isn't too far-fetched given how volatile this name is. But your first target would be 53 on the upside, and this just is a tough name to get behind. So let's keep going. The next name is Groupon. And I don't know anything about this. I know what Groupon is, but I don't know if this is a name that should be bought. I don't know. It's just hard to get behind. All I can tell you is this 26 level is this 26 level is your line in the sand, and you can just pivot around that. I don't think you can short the stock yet. I don't know when that's probably not available for another couple of weeks. But and options for Groupon, probably the same thing, probably 2 or 3 weeks before they come out. So you can only play Groupon from the long side, which means you have to be buying with your reference of 22.76. To be honest, this is just a name I would stay away from. Now, Jpmorgan, that was another one. And we see here, Jpmorgan is hovering around that point of control over the last 3 months. And it's struggling. You can see the 50 and the 20 are within price. So we are in a range-bound trading zone for Jpmorgan. You don't want to, from a bullish standpoint, you really don't want to see Jpmorgan go much lower. And if it does, if you're playing from the long side, I would stay away. If you're interested in some downside, maybe a downside put spread would be sufficient enough to your risk reward profile. But, just giving you a volume profile, technical analysis, opinion of Jpmorgan, I think this, our lows today were a decent line in this line in the sand. Upside targets would be 34, 33.75 really, and then 35, and ultimately 37. Downsides 32, 31, and from there it could go as low as 20, 28, 27. So this is Jpmorgan. We already covered Apple. And the last one is USO. This is the ETF for oil. It suffers from contango, so I don't really like this underlying. And what contango means is when people, this ETF is structured in a way that it follows the oil futures contract. But unfortunately, when the front month futures are expiring and people are rolling out of those to the next month, USO has a tendency to sell off just because it's how it is structured. So this is a name where in short-term moves, like, for example, what we've seen in the last couple months of oil in general, USO has performed. But if you pull up a chart between USO and oil, you can see oil has outperformed the USO by far. So it's really hard to play outright oil, but if you want to, using USO, even though it has those structural problems, 39 is your upside target. Your downside target would be about 34, 35, and ultimately 33.50. And from there, I don't think it will go lower than there, but from there, pretty much pick your levels. But maybe we should use oil as a better representation. And you can see we hit that point of control, and now we're struggling, guys. Not that this is any significant, but this is how it starts. 4 hours. So for the last 2 hours, for the last 8 hours, oil has been rejected from the point of control over the last 6 months. So I would say a downside target for right now is 94.50 on the oil contract, and 98.50 is your upside. So I wouldn't be, if anything, I would be inclined to sell oil, especially USO in the near term, and I would be a buyer on any weakness though. So anyways, guys, this is a pretty lengthy video. I hope you enjoy this. This and the weekend update will be the last 2 free videos like this, and then it will be for paying members only, but there will still be a free video that will, free chart of the day that will give you a trading idea, a trading strategy, so that will help you too. I hope you join the site. It will be something special. But anyways, guys, have a good night.